Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look at euro currency once again. So although yesterday's was really a session like the boiling pot, has a lot of information, different suspicions, lots of headlines in the news, but in two words speaking, actually we haven't got a lot of new information. So Biden has told nothing. Actually, we have passed his speech, the major thesis of his speech in our Telegram, so we could see that nothing actually there. But what I would like to say is that in all this really noise that you could find currently in media, personally I see two major points. First of all, regulation authorities such as like Fed, United States Treasury, and big banks, big whales such as JP Morgan, Citi, Goldman Sachs, they are relatively calm. They curiously calm in this situation. So it seems that our suspicions that this may be planned actually situation, and Fed actually takes part in this, or at least with this silence agreement, it has started. So there are two major reasons for that. One actually is to centralize the banking system in the United States and close lots of small and mid-sized banks. Second, it is attempt, or maybe not attempt, but in actually starting currently, the ability to put the responsibility on the starting quantitative easing on this situation, on the small banks. So where we have tried to raise rate, we have tried to fight inflation, but as you could see, mid and small size banks were not prepared for that, and they can't hold this burden, and we have no choice but starting the quantitative easing. Because conversely, if we would suggest that Fed intends to fight inflation right up to the end, the logical step that they have had to do is actually provide financing to the Silicon Valley Bank, support them, support a couple of other banks. This was not too expensive, and keep going with the interest rates, fighting the inflation if they would like to. But it seems that this action was well planned, and we see two consequences: centralization of the banking sector and providing the background for starting the quantitative easing. On this situation, the dollar could become weaker in the nearest term, but European banks and European authorities also start recognize that what the Fed has right now, United States economy and banking sector has right now, the same they will get a bit later. So I am not excluding the fact that the European Central Bank also will change their prospect in a rate hiking cycle. So probably they deny the rate and change for 0.5% this week, and maybe it will be 25 points, or maybe they even take the pause. I do not know. But from that standpoint, the balance between the rates in the United States, European Central Bank probably should be held. So today we will get the inflation data, and with the soft inflation, I would suggest that our prediction here probably will continue, because it's already currently everybody expects that Fed at the best will change rate for 25 basis points, but maybe will not change it at all. It is already dovish for the dollar in the current moment, and additionally, soft inflation also could support this. So let's keep watching, because based on the technical picture, formally we have the bullish context, trend stands bullish, markets moving higher and bending and leaving behind the OP on the background of this situation. So actually is going on things that we have discussed in the weekly report. On the 4-hour time frame chart, market has reached the confluence that we discussed. Here's a lot of volatility has happened yesterday, but actual direction hardly has changed. And market technically has formed bullish reversal swing. So you can see the swing up is greater than the previous swing down. And usually in the current circumstances, market could get more or less solid retracement. So currently we're still watching for 10610 area, as we said, because it might be the major point that will clarify the short-term direction. Downside breakout means taking out with this lows, moving to the 10430. If market will stay above this area, or maybe above 50% level, that's euro likes, around 10635, I suppose. So if market will stay above it, it means that we could get further upward action in euro currency in nearest term. Another reason why I suggest that here is a bit deeper retracement could happen, just because on the hourly charts, take a look, market has unfilled gap. Despite all this volatility and gap up opening has not been closed totally. So market has tried to do this, but it hasn't reached the close price of the Friday. So we have the open gap here. As usual on the Forex market, almost now the gaps remains open. It's a very rare situation that this happening. Market tends to close the gaps, and it leads us precisely in an area of our support. So take a look, gap stands around 104, 10640. So we suggest that maybe 10610, 10635. If we will take 618 and 50% support, so it's very close. That's why let's keep watching what will happen. Maybe this will happen already based on inflation data, and let's keep watching what will happen around the major support. Then we will come to some conclusion and make the decision.